Pig butchering scams and IRS process to fight for your tax loss. If you lost money in a crypto or investment scam like a so-called pig butchering scam, you might think the nightmare ends once the money's gone. But here's the truth, the IRS might come after you next. In this video, I'll explain how to report the scam properly, prevent the IRS from taxing fake income, and what to know about claiming the losses. I'm tax attorney Chad Silver, founder of Silver Tax Group. I've been practicing tax law for over 15 years, and it's the only thing my firm does, and it's the only thing I'm interested in. We live and breathe tax defense. We've helped thousands of taxpayers across the country resolve IRS issues, and our promise is simple. We build it, we submit it, and we'll defend it if necessary. Let's walk through how to handle the IRS side of a pig butchering scam step by step. Okay, first, what is a pig butchering scam? A pig butchering scam starts online, often a friendly message, dating app, or even a wrong text number. Over time, the scammer builds trust, then convinces you to invest in what looks like a legitimate trading or crypto platform, promising you profit. You see fake profits on a fake dashboard until one day, withdrawals stop and your money disappears. It's one of the fastest growing financial crimes in America. Why the IRS gets involved? Even though you were scammed, the IRS might still think you made money, and this is what really sucks about it. Crypto exchanges or payment apps often issue forms 1099-B or 1099-K reporting your activity as income or capital gains right to the IRS. They become part of your master IRS tax file. When those reports hit the IRS system, it looks like you made a lot of money, you made profit. Soon after, you could receive a CP 2000 or CP 14 notice saying that you owe income on tax that never existed. That's why you have to take action fast. Step 1, gather your evidence. Start by documenting everything. Screenshots of the messages, platforms, and transactions, the wallet addresses, blockchain records, and bank transfers, police reports or IC3.gov complaint information. You'll need this to prove to the IRS and anyone else that the funds were actually stolen. Step 2, report the scam. This is super important. Report the crime to IC3.gov. This is the FBI's Internet Crime Complaint Center, FTC.gov, your local police, and the crypto exchange or payment platform actually used in the scam. This creates a record number and a paper trail for your IRS case, and you're going to need it. Step 3, file correctly with the IRS. When filing your taxes, it's crucial to report the situation accurately. If your identity was used, submit Form 14039. This is an identity theft affidavit form that the IRS has for you. Go on their website and get it. If crypto was involved, use Form 8949 and Schedule D to list the transactions, marking the fraudulent ones clearly. Attach a statement explaining the scam, the amount lost, and your IC3 or police report number. Now, you're probably not going to be able to do this online. You may have to file a paper return to get these losses and claim them accurately. And this helps the IRS understand that the loss wasn't income. Can you deduct the losses? Well, this is really important. Now let's talk about those deductions. Now before 2017, you could often deduct theft losses on your taxes. But since the Tax Cut and Jobs Act, personal theft losses generally are not deductible unless they're tied to a business or federally declared disaster area. So you're thinking, well, what do I do now? Well, there's still a path, and it's not easy, but there is a path to claim the losses. If you entered the transaction for profit, like an investment or trading opportunity, the IRS may allow a theft loss deduction under Section 165C2. To qualify, you'll need proof the transaction was made for profit, not personal reasons, evidence of theft under state law, no reasonable prospect of recovery. If you can prove these, you might still be able to deduct the loss, but it has to be done carefully and often done with professional help. We've dealt with hundreds of these cases, and we can help people get the loss. If you've had issues, call us. Now, also respond if the IRS sends you a notice. If you receive a CP 2000 or CP 14 from the IRS about this, don't panic and don't pay it. Send your documentation, fraud reports, and explanation proving it wasn't theft. We had cases where clients owed tens or hundreds of thousands of dollars in fake taxable gains, and we got those bills completely removed once the IRS saw the full story. Step 5, protect yourself going forward. So going forward, request an IRS identity protection PIN. Freeze your credit with all the credit bureaus. Monitor your IRS account for online suspicious activity. If you've been caught in a scam like this, don't face the IRS alone. At Silver Tax Group, we've helped clients clean up their IRS accounts, proof fraud, and even recover tax relief where possible. Call us now at 855-900-1040 or visit us at silvertaxgroup.com. Our 24/7 live chat is always available. I'm Chad Silver, tax attorney and founder of Silver Tax Group. We build it, we'll submit it, and we'll defend your tax defense if necessary. Stay alert, stay informed, and I'll see you in the next video.